How to invest in crypto for beginners. Due to the rising interest, adoption, and investment in this industry, many investors are considering investing in the cryptocurrency market. This overview of cryptocurrency investment will define it as an asset class and go over its foundations. Discover the various types of cryptocurrencies, considerations to make before investing, and other details to assist in determining whether they belong in your portfolio. What is cryptocurrency? Cryptocurrencies are fundamentally decentralized digital currencies created for online use. The first cryptocurrency, Bitcoin, which debuted in 2008, is still by far the most popular, influential, and largest. Since then, Bitcoin and other cryptocurrencies, like Ethereum, have developed into viable digital substitutes for currency printed by governments. According to market capitalization, Bitcoin, Ethereum, Bitcoin Cash, and Litecoin are the four most widely used cryptocurrencies. The well-known cryptocurrencies Tezos, EOS, and Zcash are also available. Several are comparable to Bitcoin. Others have novel qualities that enable them to accomplish more than just transfer value, such as various technological foundations. Cryptocurrency enables global, near-instant, 24/7, low-fee value transfers over the internet without the use of a middleman like a bank or payment processor. Typically, no government or other central authority issues or controls cryptocurrencies. Peer-to-peer networks of computers running free, open-source software are in charge of managing them. In general, anyone who desires to engage can. How is cryptography secure if a bank or government isn't involved? It is safe because a technology known as a blockchain verifies every transaction. The ledger or balance sheet of a bank is comparable to a blockchain for cryptocurrencies. Every currency has its own blockchain, which is a continuously updated log of all transactions ever made in that currency. A crypto blockchain is shared among users of the entire network of the digital currency, unlike a bank's ledger. 5 steps for investing in cryptocurrency. If you wish to invest in cryptocurrencies, your financial situation must be in order first and foremost. This requires setting up an emergency fund, taking on debt that is manageable, and ideally having a broad investment portfolio. Investing in cryptocurrencies could result in expanding your portfolio and, preferably, improving your overall performance. Pay attention to these 5 additional factors as you start investing in cryptocurrency. 1. Understand what you're investing in. Just like with any other investment, be certain of what you are investing in. It's important to thoroughly investigate the companies before buying stocks by reading the annual report and other SEC filings. Since there are literally thousands of cryptocurrencies, each of which runs differently, and more are being created every day, plan to follow the same approach for all of them. You need to understand the investment rationale for each deal. Many cryptocurrencies have absolutely no basis in terms of either tangible assets or money flow. Investors in Bitcoin, for instance, entirely rely on someone else paying more than they did for the goods. In contrast to equities, where a company can boost its profits and drive returns for you that way, many crypto assets depend on the market turning more optimistic and bullish for you to earn. The 4 most well-known digital currencies are Cardano, XRP, Dogecoin, and Ethereum. Therefore, before making an investment, be aware of the potential gain and downside. If your financial investment is not backed by an asset or cash flow, it risks losing all of its value. 2. Remember, the past is past. Many inexperienced investors make the mistake of extrapolating past performance into the future. Yes, Bitcoin was previously only worth cents, but today its value is much more. Will that growth continue even if it does not expand as swiftly in the future? Is the important question. Investors put more emphasis on the future than the previous performance of an asset. Follow me on Instagram at Sasrizo5793. 3. Watch that volatility. The values of cryptocurrencies are the most erratic assets. They might vanish in a matter of seconds based only on a rumor that isn't true. For seasoned investors who can quickly execute trades or who have a solid grasp of the market's fundamentals, present trend, and potential future directions, it can be fantastic. For inexperienced investors lacking these skills or the complex algorithms that direct these deals, it is a minefield. In the volatility market, powerful Wall Street traders compete to outgun other rich investors. A new investor could get quickly overwhelmed by the volatility. This is due to the fact that volatility rattles and frightens traders, especially newbies. Another trader could come in at a discount. In other words, professional traders can buy cheap and sell high, as opposed to beginner investors who buy high and sell low. 4. Manage your risk. Risk management is crucial when dealing with volatile assets like cryptocurrencies, but it can also be crucial when trading any asset on a short-term basis. Because of this, as a less experienced trader, you'll need to understand how to manage risk and develop a process that helps with loss reduction. The approach can also vary from person to person. To never sell, regardless of price, may be the most straightforward method of risk management for a long-term investor. Because they have a long-term perspective, the investor can keep the position. But a short-term trader can manage risk by creating strict rules for when to sell, as after a 10% loss on an investment. The trader then strictly abides by the rule to avoid a very slight fall later becoming a catastrophic loss. Beginner traders may first consider setting aside a certain sum of trading funds and using only a portion of them. If a position changes in the opposite direction, they will still have money in reserve to trade with. The simple line is that you cannot trade if you do not have any money. You can guarantee that you'll always have a trading account by keeping a cash reserve. Although risk management is important, it will cost you emotionally. Although giving up a lost position hurts, doing so can stop more serious losses from occurring. 5. Don't invest more than you can afford to lose. Not least of all, you should avoid using money that you need to invest in speculative assets. You shouldn't invest in risky assets like cryptocurrency or any other speculative asset if you can't afford to lose it all. If you need to save money for a down payment on a home or another large future purchase, you should do so in safe accounts so that it will be there when you do. If you want a return that is certain, paying down your debt is also your best option. You will always make, or save, money, regardless of the debt's interest rate. Losing is not an option. Consider the security of any exchange or broker you utilize. Last but not least, even while the assets are technically yours, someone must still keep them safe, and that security must be strict. If they don't think their cryptocurrency is safely secured, some traders opt to invest in a crypto wallet to store their coins offline, making them unavailable to hackers or others. All investments have risk, according to Consumer Reports, but some experts think that cryptocurrency is one of the riskier investing options available today. Research exchanges. Learn about Bitcoin exchanges before making an investment. There are thought to be more than 500 exchanges available. Before making a decision, do your homework, study reviews, and consult with more seasoned investors. Know how to store your digital currency. You must store cryptocurrency if you purchase it. You can keep it on an exchange or in a digital wallet. Wallets come in many varieties, and each has advantages, technical needs, and security standards that must be met. You should research your storage options before investing, just like with exchanges. Cryptocurrency might not be the best option for you if your investment portfolio or mental health can't manage that. Be ready for challenges while investing in something new. Do your homework and start investing prudently if you intend to take part. If you find this video useful, don't forget to like and subscribe to our channel.